One of the most common questions I get is, Paul, is X market a great market for me to invest in? Well, I always say, guys, I don't know. But what I will tell you is the sexier the market, because you always hear in real estate, location, location, location. I was once on a panel where one of the guys said he was a billionaire, and every single panelist was asked, where would you invest right now? And I said, I was the panel head. I said, I'm going to answer last. And every single one of them said the exact same thing. Pick the right location, pick a high demand area, blah, 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 blah. And I literally said on the panel, these guys have no understanding of investing, because it's not just about where the most demand is. It's not about that. Yes, go buy the best building on Wall Street. But if you overpay for a good thing, you will end up doing poorly. How did Donald Trump have all those amazing buildings in New York City and yet was on the brink of bankruptcy how many times? Look at that San Francisco office building, one of the top office markets in the country, and it's selling for 80% below what it sold for or was valued at in 2019. How? Well, when you overpay for a good thing, it becomes a bad investment. Like everything in this world, this iPhone is worth $1,000. It's the best phone out there. If you believe it's the best phone out there, pay $10,000 for it. Well, no, I can't pay $10,000 for it. Exactly. It's overpaying for a good thing. So what are the best markets to invest in? The best markets to invest in are the ones that you can sit there and buy at a reasonable price and get your IRR that you desire. Now, do I think you should pay a higher price for faster growing markets that have faster growing rental values? Absolutely. Absolutely. But I do not think you should go and sit there and say, because this market's here, I'm going to pay like crazy because it's a growing market. It's no different than saying NVIDIA is big in AI and the stock price is going to go to the moon. Why is Tesla down over 50%? It's the number one electric car company. Why is it down 50%? Because eventually, over long periods of time, every investment is a weighing machine, but in the short run, they're a voting machine. No different than real estate. No different than real estate. Go look back at 05 and 06 and 07. I still know people who bought properties back then who still are barely getting above what they paid for them back then. Barely above. Even if they're up 10% on them, 20% on them, that's crazy. And guess what? Those properties aren't in markets like Cleveland, Ohio, where I'm at. They're in markets like Phoenix, Miami, all those places. Now, obviously, there's going to be the markets there have skyrocketed too, but it's for people, the values comparing to the last 3, 5, 10 years. But if you go back to 06, 07, you probably don't see as much appreciation as you thought you would. But that was the most important time to buy because real estate's the best investment ever. So just like everything, just like we have our stock analyzer tool, we have our real estate calculator soon. All that should matter to you is what's your IRR and what assumptions are you making about the future. I encourage you to make higher assumptions on rental growth rates in markets that have high demand. Look at New York City. There's only one way to build in New York City, and that's up. It's very difficult to go up. So rents will probably grow at a faster rate in New York City than a place like Dallas, where they can go out and out and out and out. Look at Columbus, Ohio. We have a lot of real estate in Columbus, but they can keep going out and out and out. I always say in those kind of markets, my biggest fear is that somebody builds an apartment building right down the street from me that's better quality for a little bit more in rent. That'll hurt me. Now, I want them to build better quality for double my rent, because that means I can probably raise my rent 30 or 40% and still get away with it because I'm still the value on the street. But if you don't understand that it's possible to overpay for a good thing, nothing in this world is going to save you. I am not the channel for you. You should not be listening to me. But if it makes sense to you that you can overpay for a good thing, you're on the way to understanding investing. But you have to understand that basic. I always tell people there's two things you have to understand to be a good investor. One, every investment's the present value of all future cash flows. And two, that it's possible to overpay for a good thing. And it's possible to underpay for a bad thing. Those are part of the same statement. If you can understand those two things, whether it's real estate, stocks, any sort of investment, then you will do well in investing. And with real estate, I don't chase markets. I go after returns. I look where there's a disconnect between the big players in the market trying to find the next sexy deal versus cash flow. And it happens. And it absolutely, years ago, I had a blog, and in there, I showed people how my rentals in Cleveland did better than rentals in California over long periods of time. And I showed that in order to get the same returns, the real estate in California had to grow 7.7 or 7.8% a year over a 30-year period. And I looked at California's median home prices and was never able to find even a 20-year period in which real estate values went up over 7% a year over 20 years. Now, I found 5 and 10-year periods where it happened, but they were usually met by big declines or flat periods for a while. That's just the way I look at it. Every investment's the present value of all future cash flow. And especially with real estate, there is a cash flow. If you have a rental property, you are getting a cash flow in. A guy recently hired me for a 4-hour consulting about a specific deal in California for himself. And at the end of the conversation, he said, you know what? I'm not going to buy the property. But he knew already. Like when we were talking, I said, you know the right thing to do here. He goes, yeah, but there was other situations involved. But he said to me, Paul, I'm not going to cash flow this thing for 4 or 5 years. I said, yeah, in all likelihood, you're probably right. And I said to him, listen, the market could be crazy for the next 5 years. And that home that rental property you're buying for $2 million could be worth $4 million in 5. I don't know. But the point is, I said to him, if you're pulling money out of your pocket every single month to cover that and it doesn't go up in value, you've lost 2 different ways. Or it doesn't go in value as much as you thought it would. You've lost 2 different ways. And that's the goal of this channel, is to sit there and say, listen, there are a set of outcomes that can happen when you buy any investment. What are the more likely outcomes? When it comes to real estate, if I'm chasing a market, guess who else is chasing it? Everyone else. And when a lot of people are bidding on a property or any sort of investment, what happens to the price? Does it change the income of the property? No. It just changes the price of the property. It's that same income level. And look at over time. I like to find boring, smaller markets that still have a growing population from job growth. And I like to buy there. That's what I like to do. And I will continue to do that. Nobody thinks Ohio's sexy. I do. You know why? Because my wallet looks sexy if I buy in Ohio. Because I can buy more cash flow for the money in Ohio than anywhere else. Now, am I likely to get a 5 or 10-year period where my property goes up in value 6 to 8% a year? No, I'm okay with that. You know why? Because I have cash flow. I'm paying down debt, and I sleep very well at night for that reason. But tons of people have become very, very rich buying in sexier markets. Look at Sam Zell. He was in Chicago. Look at Don Sterling. As much of a sleazebag as he is, he was in LA, and his family owns 9,000 units, I'm told, pretty much free and clear of any mortgage. That's incredible. That's absolutely incredible. But when it comes to what markets to invest in, you need to be aware of what your goals are. If you're okay funding a property for years as the value goes up, hoping the value goes up faster than every place else, more power to you. More power to you. But I'll tell you right now, everybody thinks Ohio is declining, and yet we've seen nothing but real estate values go up like this over long periods of time. And I'm okay with that. I'm okay with that. So guys, if this makes sense to you, please subscribe to the channel. Please listen to us, because we look at investments as a value of cash flow, not as, look at this awesome thing, I need to have it because the story is very good. The story has to be decent. The story has to match the price versus value. That's what we're looking at. Thank you very much for your time.